In my last video, I spoke of 5 trading tips to trade like a pro. Tip number 3 was non-trending transitions to trending. One of the earlier lessons in my trading life I learned was if someone asked me about the market and the response, or my response, was something like, there is no reason to see much movement, or the market is choppy, or we are stuck and I expect much of the same, I would find myself saying after the fact, I guess I was wrong on that one, after the price ripped one way or the other. Yes, markets chop. They non-trend, and although there is money to be made in those types of markets, especially if you recognize the potential to non-trend, what I know is non-trends don't non-trend forever. They transition to trends, and trends are fast, directional, and tend to go further than traders expect. So the lesson I learned was not to see choppy trading to continue now and forever. It was to instead look for a trend in the future. After all, it is what happens in the next hour, the next day, the next few days, or longer, that traders need to anticipate and see that leads to success, like the pros. Let me show you. On Monday, I posted on the Aussie versus US dollar. In that post, I titled it, Aussie US dollar can't hold the price above the 100-hour moving average, and had a subtitle, Buyers Had Their Shot. From the title, there is a bearish bias. The price is below the 100-hour moving average, and the buyers had their shot. So it implies a failure, right? Here is the chart from the post. Let's work through what I wrote and my mindset as it relates to non-trend transitioning to trend for the Aussie versus US dollar. Like a number of pairs today, the price of the Aussie US dollar has seen down and up price action. The high was able to take a few peaks above the 100-hour moving average at 0.76318, but could not stay above. The buyers had their shot. Can the sellers take more control now? Looking at the chart, here is the 100-hour moving average. The buyers tried to get above the moving average line, but those tries did not last long. The price looks like it is starting to move to the downside. And then I write, the sellers would now not want to see the price move back above the 100-hour moving average. That's the blue line at 0.76318. They would like to see the price move and show momentum below the 200-hour moving average, the green line, at 0.76223. Stay below would have traders looking back toward the low for the day and the low from Friday, which came in at 0.75877. What am I saying here? First, I am defining the risk. Don't go above the 100-hour moving average line, the blue line. Next, stay below the 200-hour moving average is a good clue for trader confidence. Thirdly, I define a target, the low for the day, the low from Friday. So I continue by saying, I am taking a broader look. The pair has mostly traded between 0.7577, that is the low here, and 0.7663, that is the high up here, over the last 14 plus trading days. Now there are some failures, well, here and up here, but generally speaking, the price has been non-trending in an 87 pip trading range. I outline it right here in my comment. I finished that paragraph by saying, at some point, the ups and downs will transition into something more trending. My mindset is starting to think trend. I then explain, we don't know when this will happen. That is, we don't know when the market price will trend. But traders will take clues from the market price action and the technicals, the tools applied to the price action, like the moving average line. Holding near the 100-hour moving average line on Friday and again today is putting a lid on the rally. Putting it another way, this area is the risk/bias defining level. I then ask, will that lead to a move outside the recent range? And I answer that by saying, stay below the 100-hour moving average, keeps the bias lower. The next move would be below the downside targets, basically the swing lows, until the price breaks out of the red box, this box right here, and the other extreme lows. Conversely, if the price moves back above the 100-hour moving average, then I write all bets are off for that idea. The buyers take back more control. So what happened? Let's fast forward to Wednesday. The new post headline reads, Aussie US dollar moves to new highs as breakout today continues to trend. The subtitle reads, the pair made a break for it today, and it was to the upside. Let's take a look at the chart from that post and see what contributed technically to the reversal of what we thought was a downward bias and surge to the upside instead. This is the hourly chart. The red box is the same with 0.7577 as the lower extreme and 0.7663 as the upper extreme. On Monday and into Tuesday, the price was able to stay below the 100-hour moving average, the blue line. There was some downward move below the 200-hour moving average on Monday and more on Tuesday, especially after testing and holding below the 100 and 200 moving averages right here. The price did move below the Friday low of 0.75877, but could not complete the move outside the red box below the 0.7577 level. That was key. That could not be done. So buyers leaned against the low of the red box, and when the price started to move back above the 100 and 200-hour moving averages later in that day, the bias shifted more to the upside. Buyers are more in control. Moreover, we are now in day 15 of a largely non-trending market. Should you be getting long? Should you be buying the market instead? Yes. The dynamics of non-trend to trend remains in play. On Tuesday, the price closes near the highs. Now on Wednesday, the price initially tested, then broke outside the red box right here, and it was off to the races. The price trended higher. At the time of the post, the price was testing an old floor from March, and subsequently the price ended up breaking above that area and running even higher. The correction today stalled at the old floor area based and moved even higher. Overall, from the point of the move back above the 100-hour moving average of the blue line, the price moved about 138 pips to the upside. From the break outside the red box, the upper part of the red box, the price moved about 100 pips to the high in about 1 day's time. The trend move was fast, it was directional, and looking at the chart, we still don't know how far the trend might go. Non-trend transitions to trend. It's a fundamental mindset successful traders have, look for, and then use to ride trend moves. Oftentimes, the technical clues will help tell the story. You just have to paint the broad picture, look for the opportunities, trust the price action and the tools and the levels, and benefit from the rip lower or the rip higher instead of missing out after being mesmerized by the non-trend. If you like this video, please give it a thumbs up. If you didn't like it, you can give it a thumbs down. My name is Greg Michalowski, and good fortune with your trading. Bye-bye now.